To move away from the overall market and check in on the trading day, I'd now like to welcome in Kevin Hincks, live from the CBOE, for our pre-bell playbook as always. And Kevin, markets as of now are pacing, of course, to close this week lower. What were really the key drivers behind the pullback this week?
Good morning, Jenny Horn. I think right now there's just uncertainty. And remember, earlier in the week, Goldman Sachs CEOs, Morgan Stanley CEOs talk about imminent corrections. And there's an overall sense of high valuation and worries about the wall. Think about it. NVIDIA has gone from about $211 was the high this week down to closer to 185, 186 to start the day. So the leaders that have brought us up here are struggling up at these levels, and there's news flow that's causing that. The government shutdown is problematic, right? We're going to talk about the cancellations for this morning, but overall, the market, which if we break it down, Jenny, earnings are still coming in 10% higher than last year. So the market in terms of earnings is doing well, but you can worry about valuations. You can worry about the overall uncertainty of interest rates, as Jerome Powell came out and kind of hedged when he cut interest rates. So there's just a lot of things starting to pile up, and we could use a big jolt of positive information. What's that? How about opening the government? That would be a nice jolt for the markets, Jenny.
Okay, and to speak on that, of course, government shutdown still being a major headwind. And specifically, you mentioned how this could affect, the slowdown in airport traffic before, of course, the major holiday seasons. This is also a pretty critical time for the airlines as well. How do you see that playing out here in real time?
Yeah, here's the numbers from this morning on cancellations. American Airlines announcing 220 canceled flights this morning. They made a positive note saying that's of 6,200 flights, 220 cancellations. United saying fewer than 200, but they could cut 4% over Saturday and Sunday. And then Delta Airlines cutting so far today about 170 flights. So they're all calling for the government to reopen and, in airline travel. And you're right, Jenny, we are coming closer and closer now, about 2 weeks away from Thanksgiving and holiday travel. And that is a big concern, as it should be. But remember, the news came out yesterday about 10% cuts to airlines across the board. These aren't 10% yet, but they're marching towards that if the government stays closed. So, yeah, travel is certainly something concerning, and it just adds to the one more thing, causing uncertainty in the markets, Jenny.
Okay, so maybe something that's less uncertain right now is Tesla shareholders approving Elon Musk's new compensation package. What does this signal right now about the confidence in Tesla and their overall long-term strategy?
Well, remember, these targets are for 2035. So the really good news, you got 10, 11 years of Tesla are being run by Elon Musk. That is the unequivocal, really good news for Tesla. Now, some of the things he's got to achieve to get there. $8.5 trillion market cap. Jenny, that's more than 2 Apples. Apple this morning is 3.99 trillion in terms of market cap. It's about 1 3/4 size current NVIDIA. Also, vehicle production. 12 million vehicles a year he has to sell. Robots, deploy 1 million robo-taxis and 1 million humanoid robots. So that has to be, you're talking about a completely different company that Tesla will look like by 2035 if he hits these milestones. And Jenny, think about the wealth created if Tesla, which stands right now 1.5 trillion, goes 8 times that number, 7.5 times that number. It is mind-boggling to think about the numbers.
And I also think encouraging that it was a huge majority. It was 75% of shareholders that approved that vote. It was not even close. So I think encouraging to see what shareholders feel, and obviously that needs to be taken into account that it was just such a huge majority. It wasn't even close as far as that decision in terms of the vote. But last but not least, here, consumer sentiment data is out at 10 a.m. Is this going to be more important than normal because because we have such a lack of economic data, or what really are markets looking for right now?
Exactly right. Because think about yesterday's Challenger job cut. That comes out every month. We barely pay attention to it. But yesterday's number was quite big, actually, at 153,000. So, yes, we'll pay more attention to University of Michigan consumer sentiment that we're going to get at 10 o'clock Eastern, simply because it's the only thing we got to hold on to. The numbers they're looking for now, from 53.6 to 53.2, just slightly lower. Year overhead inflation, it was 4.6%. We'll see where that comes in. You know, Jenny, from hanging out with me for a lot of years, that I'm not a big fan of the sentiment or soft data, but we'll trade off it anyway today, Jen.
We will, and I definitely think that it will be hopefully encouraging once we finally get some of this economic data back into the fray. But for now, we have the few and far between reports. We'll be watching, of course, consumer sentiment out at 10 a.m. So appreciate it, Kevin Hincks. Always a great way to start off our Friday.